Today we're going to be taking a look at wave patterns. What are wave patterns? Wave patterns are when a stock pushes up and then sells off again. Why do we use them? Before a stock can move up, a lot of sell orders and buy orders have to be flushed out. Once all those orders are flushed out, we can move up again. How do we use them? We use them to find common points for a stock to bounce once it sells off using Fibonacci retracements, and we use Fibonacci extensions to find potential points of resistance so you can close out profits on the way up so you don't go from green to red. Enjoy! Today we're going to take a look at more wave patterns. Wave patterns are very useful for visually identifying setups without making a lot of measurements, and when price pushes up and comes back down again, using retracement levels, you can find points that things are likely to bounce off of, and this can give you a good idea of where to set your alerts and then follow up from there looking for a good entry. So first of all, we see this big sell-off in Apple. What we're looking for is a push up and a pull back. Once you see a push up and you see things start to sell off, you can draw your Fibonacci retracements and look for possible areas of support. Let's go to the 20-day 1 hour. You can see we push up here and pull back right to form a nice blue candle bounce off of our 47.5 line. So then all you would do when you see this selling off, set your alert at your 618, set at the 47.5, maybe set at the 282. And those would be the most likely points I would say a stock would bounce at. After that, you follow up and look for a higher low and then make an entry. Now, possible points of resistance on the way up, you could just measure this wave pattern from low to high, project it off of the low, and you can see our first one is our 28.2. Our next one would be 47.5. Now you can see we don't make the 47.5, but we do come down, and it looks like we're forming a blue 1 hour candle off of this 282. So this could backtest here and bounce along. If this holds, this might still be good for another upward move. Another interesting point to note here quickly, when you can see a wave pattern might be starting to form, you see this downward channel. We're going to draw a regression line from the top to the bottom, and this will plot the center line for this downward channel. Now when you can see we start to bounce off this regression line, that may be an indication that we're moving away from this downward channel into an upward channel. I commonly find things bounce off the regression line when they're starting to move out of a downward channel, so I find that a helpful, simple drawing tool. Next, moving over to AMD. Now these are some retracement levels from a much larger retracement from our 88 level, but just zooming in on this wave pattern for now. Once we can see things start to roll over, we'll draw a retracement from our top to the bottom, and you can see we bounce off this 282, which is also another 282 with that larger retracement. And we push up to bounce off. We push up off a multiple 282 to get rejected by our overall 618 retracement level from the 88 sell-off. So once you've identified your wave pattern and your possible points of resistance, then to see a longer term profit target, measure from your low to your high, project it off of the low, and just to keep things a little more clear, if we remove this, we can see we've pushed up to get rejected by this long-term 618, but we're also coming down to give a blue candle off of our 28.2. So if the 28.2 is holding, I would say this is still a bullish move. We could backtest along here for a while. If we start to break below, then you might have to reconsider things. Okay, quickly moving on to Facebook. Facebook, you can see another good wave pattern forming here. So we just take our Fibonacci retracements, take them from high to low. Now, in very turbulent times, you can see things bleed through these retracement levels. You can set an alert for when it breaks above it, and then you can see with this red candle we start to close above it. So again, measuring long-term profit targets. To see if this upward move can be repeated, we're going to measure from low to high, project it off the low, and you can see we're pushing up and selling off, still holding above the 282. So that's a pretty good sign overall, just like the other ones. Moving over to Nvidia. Now this is an old Fibonacci extension that I've used for a while, and you can see price is getting rejected by the 618. But when we start to sell off, again, you just want to measure with your Fibonacci retracements from high to low. And you can see we get rejected by this multiple 618, and we're coming down to form another blue candle off of this 47.5 level. Or if you wanted to use a more current movement for your extension, and simply measure from low to high with the Fibonacci extension, pitch it off of the lows, and you can see here we're getting rejected by the 47.5 extension, forming a blue candle off this 8-day moving average, and we'll set an alert down here at the 28.2 to see if we can get it cheaper. So Tesla, you can see a wave pattern forming here. I just find wave patterns so useful because you can visually identify them without scanning for hours and hours or making tons of little drawings. So we're just going to use our Fibonacci retracements again from the low to the high. You can see we're pushing up to try and close above this 47.5, which is also a long-term 618. So that would be very useful to see it close above that. In case it doesn't, I'm going to set an alert at this 28.2 retracement level, see when it hits that, see how it acts. And you can find wave patterns on different time frames. You can see another wave pattern forming right here. Now, quickly, let's look at some things on a smaller time frame. Let's go back to Apple. You can see another wave pattern forming here. So all we're going to do is use our Fibonacci retracements again from low to high. You can see we're holding above this 618, which is also a 28.2 extension of the longer term wave pattern we saw. Holding above a 282 and a 618 would be a great sign. Let's look at NEO, everyone's favorite stock right now. Now NEO, you can see in a longer term, it's hitting our 1282 extension, looking for a bit of a retracement. But if we were going to look at just here, this might even be more of a double bottom. But if we took a Fibonacci retracement, we can see we do bleed below this 28.2 retracement, but close above it in the same 15 minutes. So we dip down to collect a bunch of orders. Once they're all cleared out, the stock can move up again. And last one is Workhorse. Workhorse had a pretty decent move recently. We can see a wave pattern forming here where we push up and pull back. So all we do, again, I know I keep saying this over and over again, but I want you to get it. Measure from high to low with our Fibonacci retracement. You can see it's clearly holding the 28.2 line. After that, when all these orders have been flushed out, the stock can move up again. So if you see something, make a good wave pattern, start to channel up, maybe take a position, set a stop loss down here, and just watch your profits run. So that's how I use wave patterns to visually identify setups. But I hope this helps you visually identify setups so you don't have to spend hours and hours looking at charts. And you can just use this method instead, the wave pattern.